Peters, how's everyone today? It's Happy Friday. We're about to have a 3-day weekend, probably much needed, right? What a day yesterday. I had to play a little of the danger zone because it was quite the move. Um, let's take a look at this MP chart. Okay, the market profile. This was pretty telling. We had a nice day, putting up some nice trades. When you have this kind of uh, all-time highs made during the Asia and Europe session, like we did yesterday, opened up in the middle of the range from Europe, which was right around the point of control, and then broke. That was a typical type bull trap when you make all-time highs or recent swing highs in the overnight session, and then the U.S. session opens and could not take it out, which started a push down. Now, we had quite the price overlap. If you look at this price overlap here, right, that's the core. This is about 5 days of price overlap, and closing pretty much in the middle of the range, right, of this high volume node. And so once we've failed up here, that overreaction up started to cause the overreaction down. But there's only so many times that you could come out of this type of price overlap and not get a good reaction, right? Meanwhile, all the indices followed pretty much. It took a while for the ES to break hard because of the NAS. The NAS kind of was skewed with this NVIDIA. So, but once they started to break, then the dam opened up, right? All right, let me just let's take a look at this profile here. And I like to do this, as you know, so we could see how this looks on the 30-minute bar chart. This is the profile from yesterday, right? And this is the 30-minute bar chart expanded out. So you could kind of see, you see the tails once we got below it here, coming back and testing and trying to maintain and get back above this high volume node. But once it couldn't, then we started really to break when we took out these lows, and you could see the single prints all the way down. Okay, so generally, what do we look for, right? We look for a filling of these single prints here, right? During the U.S. session. The overnight sessions aren't quite as important. It's more important that if we have this cave, right, that we have right here in the U.S. session, that we're going to go and try to do some structural repair work there, okay? So that's between this 53.14 and pretty much 52.95, 96 area. That's where the cave is. Now, we're going to open up inside, of course, with this huge move that we had, whatever, I think it was around an 85 handle move, something like that. So obvious, coming back in the middle is a pretty normal function to come in, do some structural work. Will we get up to the pivot when that's where the top, the top of this cave is? That comes in at 53.14. If for some reason they get above 53.14, that's where I think we could go to the next level, which is at 53.34. Don't think we're going to get there, and we might not even get above this current high that we just made. The overnight high comes in at 53.05 and a quarter, and the same area right here, right, is 50 is the overnight highs, is also the low from this day when we did come out of the range a little bit and tried to test in there, right? So that's what we got going there. Now, just to review, we're catching a little bit. If you look at the dailies, or better yet, you look at like the 120-minute chart, this looks like a little bit of a bear flag. We had this push down. Hang on a second. First we had this push down, little bit of a kind of a bear flag, and then we came all the way down here, and now we're doing a little bit more of a bear flag. That's how it looks on the 120-minute. Now, a couple things. We have double distribution that we, yesterday, right? This is when you come in here and you have a big breakdown connected with single prints, and then we distribute at the bottom. But we didn't quite move the point of control down there by the end of the day. We didn't do enough work. So in short, let's just review what we're looking at. We're looking at a possible fill of this cave fill here, right? And if they do get all the way up there, first time up to 53.14, that's pivot. It would probably be a short because we'd filled in now single prints. Now, on the flip side, so far, all we did was get up to right around this 105, and that's a big area. Don't pay attention to this over here because I put the wrong title there. So let's see if we can do a little bit of back and forth, filling out some of the structure. Now, today is monthly options expiration, which is usually pretty huge, the monthly expiration. We're going into a 3-day weekend. And as Mike pointed out, there's a cluster of big options around 53 and 52.50. So chances are that might keep us contained a little bit, right? So that's what we're looking at. Let me take you over here for a second. Take your Dramamine, bump. All right, I'm going to take you over to my other chart just for a second here. Just so we can see how this looks. You could see this chart, Kyle?
Yep, looking good.
There you go, Kylester. So you can see this. What we did here, we came outside originally of this Keltner and went back all the way to the other side, but this was not a confirm. And this red PAV sell, this isn't a down move. This is just the PAV sell reversal. We continue to have 2 days down, and there's a good chance that we will get down here. Maybe not today, and going into a 3-day weekend, they might want to try to keep this thing from having another move to the downside. So that's why I think you're going to see a little repair work. Okay. Let me go back here for a second. All right. So currently, like I said, if you look over here, let me bring this down here on the volume candles, you could see this a little bit better. We came out of this morning, had a nice push up, tested that 05, and now we're doing a little bit of a triangle at the moment. So we're going to keep a watch on this volume, these volume candles after the open to see if they take out the current triangle, and if they do it with volume. Okay, so we'll come back to this in a little bit. All right, in fact, I'm going to put up the let's see, I'll put up the PAV on here just so that we can see how the reversal is. Right now it's kind of doing a little two-way traffic, right? So this PAV reversal, you can see we had this push down here, and now they're trying to hold up a little bit. All right, let's go take a look at some of these other charts. Let me start out actually with this crude. Okay. Hang on. You can see my crude chart, hopefully.
Yep, looking good.
All right. So my pivot in the crude is the previous point of control here and the point of control from the overnight market. And you can see once we got above it, we're getting a nice run to the upside. And that's 76.90. I think the market will try to, do a little repair work now on the upside. It's been a very slow market downtrend, but it's certainly, you can see we've been single time framing all the way down on the low side, lower lows, not only in the US session, but in the overnight session. So now we came down. This whole area is going to kind of hold up for now. And I think we'll get to the 200-day moving average, which we're not that far away. That comes in right around the 77.53 level, right? And I like this area, this 76, 85 to 90 for my pivot. It's a point of control, like I said, from the US session and the overnight session. So the market can come back in here. And if they get on the other side of the 200-day moving average, we've got these single prints and you can start to move up and do a little bit of a cave fill, right? So currently, we're trying to get up there. I think you'll see some good resistance when we first get up to 77, 50, 55. And if they get above it, then we can continue. So that's the crude for now. Now, the crude also had a bit of a bear trap. We had this big move down. Overnight, we took out the previous US session lows, but we didn't test thoroughly the lows from the overnight session. So that's why we're getting a little bit of a short covering rally. All right, let's take a look at the gold. All right. Gold had a huge day, right? And they really shook out the longs in the gold pretty good. You can see these traps that we have, I always point it out because you really see them better on market profile because I split out the overnight session and the day sessions, right? And for that reason, years ago, I started to realize that the overnight sessions were important to see them separately than just and instead of a lot of market profile users, combine a 24-hour period, but it definitely skews your view and makes it hard to see who did what at what time, right? All right, so hang on a second. Let's just get some drawing tools here. All right, so yesterday we opened up with a gap to the downside from the US session. And that's another reason why I like looking at these market profiles broken out. Up here, similar to the trap that we had when we made the all-time high, we made it during the overnight session, and then we started this breakdown. Tried to balance, could not break, balance, took out that low, and you could see how hard we came down, and then we continued this move down here. Now, similar to the crude, we made a lower low in the overnight session, but we could not test this. Currently, you're seeing a little bit of a bounce in the gold, but I think the gold is kind of limping its way back. This could be a possible leg down for the gold that can continue for me if we close below 23, the low pretty much of the overnight session, right? That's 23.26. If they close below that here, that could kick off a continuation. But with the move that we had from not that long ago, from this week, the overnight highs, which were made on Sunday night. Basically, you're talking about 120-point break. So I wouldn't get too bearish right away. Let the markets tell you what it wants to do. But I think we can get up. Maybe we could do a cave fill here, even in the gold, and then get up to first test 23.55. That's where my pivot is. That was the inside pocket over here. You can see we had highs and lows there going way back. If I drag that over, and then you've got this low, that's a big area. So 23.55, 56 in the gold will be very important. Okay. So we could try to get our way, move back up there. Okay. For the time being, that's what they're doing. all these markets are climbing the wall of worry and trying to do a little healing and push back up of this basically oversold condition. Let's look at the bonds. The bonds had this big sideways, price overlap. When you see this kind of price overlap, the jury's not out, right? And if I were to just kind of, whoa, look at that. Oh man, it's pretty nasty there. Okay, let me use a different drawing tool. Okay, so all this price overlap, pretty much you can take it from yesterday. It's really important. Below here, we've got plenty of support and structure that the market could hold up if we get down there. So 1520 all the way up to 1620 is going to be a kind of hard to get through here. I think the market's going to try to hold up a bit. And it's possible that we get down maybe to 116.07. It's going to be a big area. It's a high volume node, but it's also an area that I was looking at earlier as well. So bonds could trickle down. They could get down to 116.07. And it's very possible that if the bonds continue to break and they close below this 116.07, that for me will also kick off a little bit of a push down to test below the swing low down around that 1520 and possibly continue. But I think we're going to test this possibly to 1607, but I think you'll see us hold it. Above here, you could see what happened yesterday. We did take out these highs, a little trappish, kind of just by a couple ticks, but we left a gap. We're still working on a gap from this low to this high, which was right here. Okay. So let's just summarize what I'm looking at. This is my overall pivot. If they get above 116.31, then we can come back and do a little cave fill, undeveloped area, and get back to this high volume node of 117.12. Maybe not all in one day, but if we get above there, then we're back into the price overlap in the balance area. We can come back and move up to this high volume node of 117.12, which is the point of control from the previous day. On the flip side, I think first we're getting a test of that, and I think we'll get down to 116.07. So I'm more negative the bonds for the early morning, and as you know, we'll watch it as the day develops. All right, let's take a look here at the EC. EC, we had a pretty strange day. I mean, we had this outside day. You could see when we have an outside day like this, the overnight highs, the US session highs and lows took out the previous overnight highs and lows and the previous US session highs and lows before that, right? So now we're just kind of doing a little filling in, moving our the puck here. We moved it up to this area here, which is the 200-day SMA moving average. And I think that's about all we're going to get on this run. I think the market's might top off a little bit here. But I don't think, in the big picture, the EC is done from going up. But I think we need to come back in and maybe get down to the pivot that would fill in this cave. So if I look at this as we get back below this 108.55, then we can get back down and probably fill in the cave a little bit and work our way down to 108.38. Currently, you could see what we did here. This is a big area. No matter how you look at it, it's just not the 200-day moving average, but it was kind of the shelf and the ledge above. And so we have the inside pocket above there. So I think you'll see us come back down and test the overnight highs again and possibly get down to the pivot. So that's what I'm looking at. All right. All right, gang. So we're gonna have some fun today. Now, a couple things just to remember. It could be a little bit whippy because we've got option expiration, monthly option expiration, and of course, weekly as well. And we have a 3-day week in front of us. And we had such a big range. Let me go back to our drawing board here, just get ready for the opening. But we had such a big range here, right? It gives us a lot of room to roam. And we've had some great trading days because volatility, range expansion followed with good volume gives us good opportunity. Those are the days that you can trade a lot and catch a lot of moves. Previous to that, we had a lot of this sideways, quite a bit of sideways price overlap. You could see, like on this day, how tough it was. It was a small range. So this was nice price, a good swoop down, test back up to the value area on the top of the single prints, couldn't get back into it, and then we continued. So today could be also a good trading day, but we're probably not going to have a huge range like we did yesterday because that was, not ordinary. And so I could see us probably testing the overnight lows at some point and possibly the pivots. So this is going to be the area for us to play in, to play playground, right? All right. Let's put this back up. And then one other thing to remind you, we have a couple numbers out, nothing really big. Let's see, today we have at 10 o'clock, is it? Let's see, yes, 10 o'clock. Got consumer sentiment and inflation expectations. It's the only number really to watch out for. And believe it or not, we only have one Fed speaker. My God, that's not normal. I mean, this week was crazy. I mean, every day we had 4 to 5 Fed speakers. It's like, send them home. Let's have just a day without them. But we do have at 9:35 Waller speaks, so could have a little chatter right after the opening. Why do they have to do it right around the opening? Got me. Okay, so let's get ready for the opening in 3 minutes, and we'll rock and roll. Cheers.